Hello, welcome back to 𝒓𝒂𝒂𝒅 Trading YouTube channel, the channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notifications so you get notified each time I upload a new content. And try to like and refer this channel to your network so that YouTube pushes to a very high level of audience. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notifications so you get notified each time I upload a new content. In today's video, we shall discuss something quite gonna change how you view the market. The topic is the pullback strategy to CMC trading. Deep pullback strategy to CMC trading and Forex synthetic market. So right now I'm going to start with theoretical part of this. I'm going to practical soon. I'm here. We have a typical uptrend market. So this market will have a natural vibration within each plane of existence, but there is this issue of stop loss hunt. Now a market is retracing or pulling back, and you suddenly hope that the pullback has ended, and so you want to continue the impulse. But when you do that, you notice that the market do not actually go in the impulse direction, or rather it keep pulling back and it keep retracing. How do you actually solve this problem? Okay, the essence of SMC, which is smart money concept, is to have a zero drawdown, meaning that you're actually entering this market when there is volume in your direction. When the big players in the market are placing orders, or where they have already placed orders, that is where you're entering the market. So that's what I'm gonna discuss in this video. Take for instance, we have a market vibrating in uptrending direction. So it will have to go like this. First of all, it creates a pullback of this length and then vibrate and go up. Now what you notice that as it is going up, inside along the upward part, it's still vibrating with two directions, up and down. Okay, and so instead of you as a trader to place a buy inside this part, within this part, what you do is to wait for a deep pullback to happen. This deep pullback will take out stop losses of early buyers in this market. So that is the sense of deep pullback strategy. So you wait for this pullback, which will take out stop losses of impatient traders, and then when it really change trend, when you draw your trend line, and then you notice that it's actually vibrating outside the trend line, that is when you are going to take an impulsive trade. Okay, but there is issue with this idea. Is it the problem of liquidity sweep? We cannot avoid it, and the issue of the chart pattern. There are patterns that needed to exist for market to actually change direction, because what you are trading is a change of direction. Any direction you trade is in such a way that there is an opposite direction that has saturated. Okay, so there is loss or zero volume and infinity volume. So you trade infinity volume if you actually know that an opposite direction has a zero volume, just like that. You see, the thing is, I'm going to go to the practical part of this so that you see it for you, and make sure you try to be proactive. Like, You see, if you watch video like this and you want to practice it, you don't need to go and practice it. Like, you don't need to go and practice it in a deep manner before you start making it. But you can actually make money in real time by following successful traders. And I don't know how we explain this, but if you think you can actually follow a particular video and deploy it and have the patience, you have the psychological stand, and you have the discipline to get the right entry. One thing is to know direction, the other one is entry. Then you can go ahead. But if you know you don't have these skills, make sure you subscribe to our VIP signal channels to start changing your life overnight and enroll for courses and mentorship, right? And right here, I'll be going to the MT5 to make this thing for real. So right now we have volatility 75 in this, and then you see, you have to know the trend first, and then you wait for it to pull back, right? So how do we know the trend in the market, and how do we know when a pullback is happening and when it's going to end for we to join the next impulsive move? You see, we have a market that is vibrating with this pattern. Okay, this market is vibrating with this pattern. Okay, you see, there is problem. You will not notice this thing because you are not skilled enough to actually analyze the market completely. You actually analyze the market incompletely, so you don't have this necessary and sufficient conditions to actually statistically produce information of what the market is doing. You don't have it. Even we that are signal experts, in most cases, we have to backtest, like we have to cross-check and go back to journals to see what we have not done. Even inability to check the moving averages analysis, inability to do moving average analysis can just make you lose a lot of money despite your accuracy in pure chart analysis. Okay, so right now I'm going to show you something that a lot of traders will do and they lose money. You see, everybody knows that this market is downtrend, and if the bandwidth of this signal is this, you have to do it in such a way that it is parallel to a physical action, right? So we have a physical action here, and so it's parallel to it. So this bandwidth is constant across inside this plane, right? You have to take it to be averagely constant because a parallel line is separated by a constant distance. So right here, this distance is over 12,000 pips, 12,800 pips plus. Now, what you need to do is to actually wait. If a market is actually in your direction, you have entry errors. So for instance, you want to enter this market here because you know that it's now making lower lows, lower high, and then you want to enter this market here when it came to a very strong resistance. You want to enter this market here, but suddenly you miss here and you miss here, you even miss here, and then you came and enter here, and you want to hold this trade to hit your TP. Even if you don't want to hold it to hit your TP, like even if you don't want to make a big TP, you see, you have to always calculate your entry error. So an error is an axis, so it makes a market analysis a 3D problem. Okay, some people analyze market in 2 dimensions. That means you are studying the time and you're also studying the price. But if you want to succeed, you have to study the price in 3 dimensions, whereby you are studying the error and error variable, the price variable, and the time variable. So what the error do is that the error shifts the price time plane and govern whether they are going to be bullish or bearish. Okay, so you have an intrinsic or a finite measurable error here, and then you enter the market simply because you are not happy for missing a lot of move, and then psychologically you are down and you are impatient and you enter this market here, then a pullback action will happen, and then it will actually take your stop loss and stop losses of other emotional traders, right? So when that's happened, it means you actually don't know what is the power of pullback. But the reverse engineering here is allow the pullback to happen if you have some error that are bigger than, like that, an error that is more than 0.1%, or an error that is more than 0.25%, from 0.25 to 0.5%. So you can actually wait for pullback, because you know that this pullback is going to actually give you high leverage. It is going to give you high potential to hit big profit. So when the pullback happens, what do? You draw the plan of that pullback based on inequality characteristics of the market. A market is bounded by inequality lines, meaning that there is probability of finding energy content of the price movement inside those plane, but outside those plane, those movement does not exist, meaning that this is a buy plane, so you can never see a sell here. Any sell you see here is not real, so it becomes invisible, even though the candles exist there. So what do? You want the market to vibrate outside after like you want the market to actually left this plane. And this plane analysis is very, very complicated, because there are plane shift, the geometry of plane is very complicated in most cases. And so that's why you need to enroll for mentorship and courses and leverage the effort of our VIP signals, right? But that's cool. We all have this skill and we know how to do this shit. So when this market break and pull back, then you put SL. Even though it goes up again, you know your SL will be in the, like, at backward, like the SL should be, in the past, based on the pullback channel plan. All right. So when you try to go in the path, you go at certain angle which is parallel to past plan. So measure, get, since you are looking for a sell, so get the slope of this move or previous move like that, and then you are entering this market, then try to move this line onto it starts onto the tip, crosses the plan. Now try to see if the tip of the arrow is actually reacting to a particular swing. So there is a swing here, so you put your SRA, see there is a pullback, yet it couldn't take you out and the market flies. I'll be ending this video. Thank you and bye for now.